Hey there, Jeremy Goodrich, owner of Shine Insurance, and this video is really the quintessential first video you should watch if you're trying to understand real estate investing insurance specifically. This is something we do all the time, and I'm going to give you a very, very quick overview, trying to do this in less than 5 minutes and really just give you the most basic pieces. Everything we talk about in this video is covered in depth in other videos and in the complete guide that I'll share with you at the end of this video, but let's dig right in. So we're going to address 6 things. We're going to talk about types of insurance policies, occupancy considerations, the 4 main coverages you should consider, your deductible, extras, and how to save money, the best way to save money. There's really 2 ways, and I think that's a great thing you should stick around for. So let's dig right in. There are different types of insurance policies you can purchase, and to boil it down to just the really simplest thing I can say, a basic policy is bad. If you ask your insurance agent, is it a basic policy? And they say, yes, that is not a good thing. ACV is also bad. If you are a veteran investor who has tons of assets, maybe you decide to get an ACV policy. But if you're watching this video, learning about insurance and investing for the first time, do not purchase an ACV policy. So then replacement cost is good. That's the type of coverage that you want. And special is actually good too. I left special as bad there, but special is good. You want a special coverage with replacement cost. Special is good. Replacement cost is good as well. You can have a either personal or commercial insurance policy. Real estate investing crosses over that line sometimes. Sometimes you buy properties in your personal name. Sometimes you buy properties in LLC's names. Sometimes a deed can be in an LLC name and still be on a personal property, but if you have the deeds of your property in an LLC name, I would go commercial, and I would take that even a step further. I would make sure that you have separate insurance policies for each LLC. It's really nice when you can put 10, 20 properties together, but you want to separate LLCs. There's a reason you created that LLC, and you want to keep your insurance in line with that same idea. Let's talk about occupancy. There's really 3 types of occupancy in investment property. The first is annual tenants. That could be a business or someone living in that space. The second is short-term tenants, same idea, but for less than a year. And the third is a vacant property. Now, there are lots of different types of properties inside those 3 contexts, but really almost every type of investment property is going to land in one of those 3 buckets of occupancy. Really important tip, never use a homeowner's policy on a property you own that someone else lives in. I've got a whole video on that topic. You can watch it. Do not do it. All right, so that was occupancy. Coverages. There are 4 basic coverages, really, really simple. First is the building coverage for the building itself. If that place burns down, what is it going to cost to rebuild that building? The second is business personal property, your stuff inside the building. Generally, there is not very much of it. If it's a apartment, for example, I usually include $3,000 for the stove, the fridge, washer and dryer if they're in there. That's about it. Everything else in that property is owned by the tenant. The third, loss of income. If something bad happens to your property, no one's going to be able to be in that property and be paying you rent. You want to be able to collect rent anyway so that you don't lose that income, and your insurance policy can handle that for you. And finally, liability coverage, which is bad things that happen to other people because of you or your building. Bad things that happen to other people, lawsuits happen, personal injury attorneys, obviously stuff that we hope we never have to deal with. But if we have liability coverage on our policy, it makes sure that we are prepared and can handle that situation. All right. Your deductible, very simple. It is the money you pay out of pocket before the insurance company starts paying. If you only have 1 or 2 investment properties, maybe you stick with a lower deductible, like $1,000 or even $2,500. If you're getting to 5, 6, 7 investment properties, and certainly if you have 10, 20 and above, make sure that deductible is at least $5,000. Again, I dig into that more into other videos, but you want to keep that deductible a little bit higher, save that money in premium because you don't want to make small claims anyway. So that is what the deductible is. Now, 2 more things. There's extras. And very simply, your policy does not cover everything. It's important to understand that. It does usually cover the things you expect it to. If you have a good quality policy with a good quality company, then it should cover the things you expect it to, but there are a lot of things that aren't covered. Some examples are water and sewer backup of drains, things of that nature, very important extra to consider putting on there. Earthquake coverage in many states in the United States, you can add that to your policy. Flood coverage, most of the time you cannot add this to your policy, but you can get a separate flood insurance policy. And a small coverage, it's very inexpensive, but really valuable, is utility line coverage. This is coverage from your property, from your building, out to the place where it hits the main system, usually underneath the road. There can be some coverage gaps there, and utility line coverage handles it. Finally, the two things that you can do to save money. The first one I already talked about, it's raise your deductible. It's the easiest way to control your costs and know exactly what you would pay out of pocket in a claim situation. But the second one I think is probably the way to save even more money. It's work with a real estate investing insurance specialist. We are the ones who have access to insurance companies that have the best pricing. We're working these companies against each other. Part of working with an independent agency is that the companies are battling for your business. I really think someone who understands REI can get you the best pricing on your portfolio and take you from there. All right, and finally, a rookie mistake. Just don't make this one. Underinsuring your building, particularly if you bought that building for a really inexpensive price and you're thinking you should insure for the price you bought it. That is just incorrect in most cases, and you want to make sure that you understand clearly that you want to cover your property for the amount it would cost to replace. There are exceptions to that, but as a starting point, that is the correct way to think about insurance. All right, we addressed occupancy, 4 main coverages, types, deductible, extras, and how to save money. We did that in about 7 minutes. I hope that was quick enough for you to get a taste of how insurance works on real estate investment properties. There's tons of videos that we've created that dig much deeper. This is just right on the surface. If you do want to dig deeper, we have an opportunity. You can download the complete guide to REI insurance. It's free at shineinsurance.com/REI. I have an overview you can put information into from your own portfolio, from your own insurance policies, and then definitions of everything and links to the explanation of those things so that you can really understand your own insurance policy no matter where you get it from. And really get a sense of how your insurance works. Your insurance is a key part of your investment property strategy, not only the price of your insurance and whether a property is worth purchasing or selling or continuing to hold, but also just if something bad happens, it's there to protect the assets that you've spent so much time building. So there it is. I hope this was helpful. If it was, please leave a comment below. Or if you just have a question, please leave a comment below. And finally, if you enjoyed this video, if you want to understand REI insurance a little bit better, please go ahead and subscribe. We'll make sure to get those videos out to you as quickly as possible. All right. My name is Jeremy Goodrich from Shine Insurance. And until the next time, have a wonderful day.